This is the pound Aussie 240 time frame, and it's a trade I've just got in. Now this is a form of flag pattern where I wait for the breakout, and we got the breakout in the form of a big red lower low lower close candle at structure. It is also a trend continuation, so I'm risking here 80 pips for 161 to target ones. Target 2's 218, so it's offering me a lovely 2-to-1 risk to reward, and I absolutely love these trades because they are very, very high probability trades. And it's a pattern I came across really when doing my back testing for flags, and really trying to nail down the best types of flags to take. And so it's a form of flag, but it isn't a flag that I trade, but yeah, I class it as a form of flag. So what I want to do is just delete everything off, talk you through the higher time frame analysis. Because this is on the 240, then really we've only got to look at the dailies and we can get all the information that we need from there. So pound Aussie, we have, if I put a structure level on here, just past this level, you can see that we've got it was support, then it was major resistance, then it was support, and if I bring that structure level down to here, which is where the candles closed, you can see we've now closed below that level. We've closed within this level. Now that to me indicates that we're going to come to at least the very lows here, but this is more junk. There's no defining structure level here. And we've also closed below this, so this is an indication right now that we're going to come lower. So where could we potentially come to? Well, we can come to our next structure level, and for me, yeah, it's going to be quite a bit further down, to be honest with you. It's a bit of a mixed bag here, so what I'm going to do is throw on a fib and say that we haven't as yet tested the 61.8 fib. And we do have several psychological numbers here. It is the pound Aussie on the daily, so just here is 17900, 17800, 17700. So I do not have a clearly defined structure level, but that 61.8, we do have an internal level of structure here, and we do have this level just over here as well. So that would be certainly an area that I'm looking at. So let me just throw back on that structure level, which was around there for the 61.8 fib. So let's go out to the 240 then and have a look at the trade. So we have been we've been moving quite nicely here. We had a lovely winning head and shoulders up here, as you can see. Very nice movement here, trending very nice to the downside, though we've only just broken below the outside return here. Sorry, below this structure level here, but nevertheless we have been moving quite nicely in a downward trend. And what I was looking at was simply this. Okay, so this is the latest outside return just here. So if we're looking for trend continuation, then we're looking at this very directional move. This very bearish move. It's not a very directional move, but as you can see, the candles are getting bigger, 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 and we have a big bearish candle, and then it stops, and all we do now is we just retrace in a channel in one direction. And so this is a form of flag pattern, and we've come in to our outside return, and quite simply we wait for the breakout. And as you can see, we've had the breakout in the form of a lower low lower close candle, and we simply play for a retest of the structure lows. But because this for me is trend continuation, I'm then looking for an extension, and if I put here on the 240, put a structure level here, you can see we have this internal this structure level here coming in at the lows at this level, which just so happens to be the 17800 psychological number. And so I think that 61.8 fib was not far from there either. Yet we're playing for just a little bit below it, but also if we invert this leg here and we have a look at where that 127 comes in, you can see that I'm playing for just above it. In fact, if I bring the orders on, you can actually see here I'm playing for the 178.10, so 10 pips above that psychological number, within that structure level and above that 127. So a very high probability trade this. What tends to happen with these trades is they just tend to drop. Yeah, they just tend to drop. And so just bring back on the orders. Stops then just above the swing high here, and because there is a psychological number here, the 180-100, my stop is just 10 pips above it. If I just go back out to the daily time frame for a moment, just wanted to check something. Yeah, okay. Let's just have a quick look at the 60 as well. Just have a look at the time frame below it and just have a look at what's gone on here. So you can see that, again, we've been channeling here, but it's not the fluid movement within the channel that I like to see. I was actually looking at this as well here on the 60. See this great big wick here? This was an indication that we were going to see some resistance up at that level. And what I was also looking at was this here, this level here, and it came into those wicks. And as you can see, the wicks, this wick went up to this level, and if I put a structure level on here, you can see that we came up to the top of the wicks here, did not close above it, then broke out the channel. And if we zoom in now, look at what's happened. We saw a small retracement, and then we've put in a lovely 60-minute doji rejection candle, and we've got 4 minutes to go until this hourly candle closes, but it's looking like this is going to give us a lower low lower close, though we haven't yet had a break below, close below. So a very nice trading opportunity. My targets are based off the 240 for target ones, and then target twos I've obviously talked about there. So this is providing a 2-to-1 risk to reward, and we'll come back to this trade, and again, very high probability trade this. We'll come back and hopefully see that we are going to hit targets on this trade. And we're back for a little update on this trade. I thought I'd just better hop on here. We did just rally 80 pips into profit there. I did say that with this type of pattern we do just tend to see the market drop. We don't usually see it drop all the way to targets, but at some point we do usually see it drop, and you can see we're seeing that relief now. So we'll come back and hopefully see this thing when we get a little bit closer to targets. And we're back for the final part of this video. It is Sunday. The market has just opened at 2200 hours, and we've seen a gap. I actually saw this gap an hour ago, just before the market had officially opened. What a stinker. Just been stopped out here for 81 pips in the end. It does look as though it's more here, but it isn't actually. It's 81 pips it stopped me out for. What a real shame. You know, all the trades that I was in I cancelled. Apart from this one, this was the only one I couldn't cancel. I cancelled the New Zealand yen. I cancelled the pound dollar. The only one I couldn't cancel was this one, and I had been in profit twice here, 80 pips here, 90 pips here, and the market has just now gapped open and stopped me out for 81. Not a great start to the trading week, but hey, it's a loss. One of those things.